The sharp drop in reverse repo usage could signal a liquidity shift or stress in the financial system, similar to the 2019 repo market crisis. This might stem from Treasury issuance surge, large-scale debt issuance is soaking up cash, drained bank reserves, the Fed's QT is tightening liquidity, or shifting policies. Money market funds may be reallocating to higher-yielding treasuries. If liquidity shortages emerge, we could see spikes in short-term borrowing rates, potential Fed intervention to stabilize markets, which could indicate early signs of systematic stress. Now, we just saw the Federal Reserve repo usage by money market funds drop to $94 billion. This is in stark contrast to the 2022 highs of $2.55 trillion. And shout out to Boss Blunts over on Twitter for pointing this out. This could be signaling major liquidity issues for the market, which we have been talking about. Moving on, good for our plays. Gary Gensler to resign in the next 48 hours. And it seems as if more people are jumping out with him, jumping off the ship before Trump becomes president. The SEC's top lawyer, Megan Barbero, to resign on January 20th as well, which is Inauguration Day. And the IRS Commissioner Danny Werfel just resigned. If I pronounced that wrong, my apologies. Finally, we are seeing spikes in the overall market. A jump on the SPY, jump on Tesla, jump on Nvidia, jump on Bitcoin. But where is the volume? Today we got a lot of stuff to talk about, so make sure to watch until the end of the video, like the video, subscribe to the channel, and turn post notifications on. Without further ado, let's get into the SPY. First of all, the S&P 500 trading at 599.08, up 1.26% on the day. We recently talked about this bearish diamond pattern that we traded and we broke to the downside on, but bulls ended up buying the dip at this ascending support trend line. We broke back up, gapped right back into the diamond, and now are trading above it. As of right now, I said in yesterday's video, the SPY could come as high as 602 to 602.50. And what we're seeing is a very, very important candle today on the SPY, because we are seeing sort of a bullish engulfing candle as long as we get a close above 600, which we are very, very close to that line. If we get a wick instead and we close at maybe 593 or 596.35, then the SPY is not in a bullish trend just yet. Now, we did see an increase in volume on the weekly candle. However, if you come and you take a look on the daily time frame, during these runs higher, we are running out of steam. We have seen volume start to fade since January 15th after this gap up. And as of right now, it could be setting up for a bull trap up here nearing that $600 level. What's happening right now is you saw bulls are seeing a beautiful, beautiful bounce up here off of the 20, potentially signaling a buy-in opportunity, but this just could be a relief bounce for the SPY to correct another 5, 10, maybe even 20% come late January. Moving on to Tesla. Tesla's also seeing fading volume, even though it broke out of this wedge. However, we are getting a close likely above 422, which is bullish on Tesla. Tesla could come all the way up to between 454 and 459.20. I'm watching those levels. Nvidia, just like I said, going to be trading sideways for a little bit, in my personal opinion, coming into the next earnings. Before we touch on AMC and GameStop, I want to just briefly show you the Bitcoin chart because we blew past 100K, now trading at 104,600. But once again, we are not seeing a large volume week for Bitcoin. Okay, we are seeing a low volume week push back into the 100K level, and this could be another bull trap for Bitcoin overall as a whole. And we are also seeing Bitcoin did get a cool off on the RSI. Now it's recapturing the 70 on the RSI. If you look at previous historic cycles, once Bitcoin decides to break past the RSI for a second time is when it ends up heading towards its peak over on the weekly time frame. So if we decide to break above the RSI and we get volume flowing in, that will be bullish for Bitcoin, and we could see the one final peak, the last rally right here. But again, if the overall market is going to crash and there's liquidity issues, you're likely going to see Bitcoin fall with it. Now, AMC completed the sale of the 50 million shares in the at the market offering. We recently just touched on this. I made a YouTube short about it. I said, listen, just like back in 2021, AMC announces a completed offering. Next day or a couple days later, we see the gap up. It is a requel. We are seeing something very, very similar. We didn't get an immediate reaction, which is completely fine. It doesn't matter. I'll show you the charts in 1 second. But basically, AMC recently announced that they are going to sell up to 50 million shares in an agreement with Goldman Sachs at the purchase of any given price until a given time frame, something along the lines of that. Basically, they raised 183.8 million before deducting commissions and other transaction fees. The sum includes revenues from 20 million shares sold directly in the market and initial cash payments related to the establishment of hedge positions for the remaining 30 million shares tied to forward contracts. This is actually good news for AMC to see a completed offering. People are getting upset that, hey, they diluted shares. Well, you already knew they were diluting, but the fact that the offering is complete is actually bullish for the stock. Why is it bullish for the stock? Well, pretty self-explanatory. It's bullish because now the uncertainty is gone as to when these shares are going to be sold and the company is going to be diluted. So what's happening now is dilution is complete. We already hit this low. It seems as if, honestly, they probably completed it back here during this low or during this decline, anything under $4. And some insiders already knew that was coming, right? And now we are getting a bounce. I don't think AMC is going to go lower after a completion of offering beneath 324. And based off of what we're tracking, this is where AMC is trading at right now. It's pretty identical, right? We are just waiting for Tuesday to come because the market is actually closed Monday for Martin Luther King Day. If this is your first time watching my videos, this is where we are trading at on AMC in coordination to the 2021 run-up. This red arrow points us right to here. After we bottom, we got this little scale higher. And then the next week started and we started getting gap ups. Next week started, we started getting gap ups. Again, take nothing I say as financial advice because I'm not a financial advisor and I don't give financial advice. Everything is my personal opinion. Everything is in my personal opinion, and I could be wrong. I'm just a guy on YouTube. We also saw short exempts scale higher yesterday for Gamestop and the day before, but now completely died down today. Why is that? It's because we got close to a level they wanted GameStop to get to. Like I said, a 23% drop from this peak, right at $27 and between $26.50. Where do we get to? Right to that basically mark, that $27 range, which is the identical pattern that you saw back here. From this peak to the drop before the bounce higher was a 23% drop. Now, Buck the Bunny's back after 10 days. If you want to drop some tin over there, some people are talking about it. GameStop on the weekly, who sold, right? Why is this big sell-off happening? Nobody sold. You can look at the on-balance volume. What a big surprise, right? Also, GameStop did get a rejection on the weekly on the RSI, rejecting off of the 70, coming back closer to the mid-range, which is a better way to start next week as a whole, getting more room to run higher. Now, what's also interesting about this is this candle actually looks like this candle back here. So instead of a green move to the upside, we saw a hard rejection, and we saw basically Citadel and these other institutions, these market makers, play their hands here. They overplayed their hands. GameStop is now also coming down to the 20 EMA, which is $26.85. Don't be surprised if we hit that level and we close at that level. That would be beautiful. I wouldn't be surprised if we see something from Roaring Kitty after hours today on Friday, or Monday night on the overnight. I really wouldn't be surprised. Also, some other stocks signaling. Take a look at BlackBerry here, right? We got the same move like back in January, same move back in January. Again, this is a weekly time frame. We didn't get this large gap down that these stocks normally see. And BlackBerry actually ran before GameStop and AMC slightly, very slightly. So we didn't get this gap down, but we did get it on GameStop, which is what you want to see, because GameStop could actually take the lead on these other squeeze plays, and then you could just reallocate some investments. But obviously, if, like I said again, if this is the mother of all short squeezes and it's not going to be controlled, you're going to see a dive in the market because of liquidity issues. You're already seeing liquidity issues across the board. If it is a controlled squeeze, sure, the SPY can go up and everything's going to be just dandy and fine, but we're not going to reach the price targets that we want to reach. Also, cost is already getting this dump sell-off right here, just like GameStop. BlackBerry might be due for one. That's going to lead us into DJT, which is up 1.7%. We have had calls on this. However, coming into inauguration, don't be surprised if they try and do something with this stock. I haven't taken a look at it right now, but go take a look before the market closes if you're in these calls before taking profit or holding them through the weekend. Take a look at the implied volatility. If implied volatility is on the rise, and premium's a little bit pricey, that's a good thing for you call holders. If they are starting to drop the premium, IVs dropping lower, they may start to potentially attempt to tank the stock coming into inauguration. So buy the rumor, sell the news type of deal. I want to talk about a couple other plays and a YOLO that I took at the end of this video, and we're very close. Eli Lilly. First of all, I just see some opportunity here. It's down 2.5%. It's looking pretty bearish and is breaking below key support levels. It does have to break below some other levels like 732.70 and so on and so forth, but I do see an opportunity to play this thing down to about 682.50, in which case from where it's trading at right now would be a nice 7.6% gain. But I honestly, I don't know if it would stop there. I see that as the minimum level, and then 622, which is a potential 15% gain to 20% gain, 597. And I don't know how far this thing would collapse, but if we broke below that, you could see a nice move down on this play. I want to talk briefly on XRP because we have seen a major breakout with increased volume on the week. And I also want to say that the RSI didn't even bounce off of the 70. XRP is showing extreme resilience here, and nobody knows what the top is going to be. At this point, this looks like one of the strongest cryptocurrencies that actually has a tier 1 listing, but it is coming for one of these cryptos right now. Moving on to Netflix, this is the YOLO trade that I took. Netflix is reporting earnings Tuesday after close, and I actually entered a position on it. Here's what I see happening. Netflix is entering a crucial zone right here between 875.50 and 860. At this point, I think a lot of these big tech companies are priced into their highs coming into this earnings season, and the market may have a dive as a whole. But I just want to say that I think Netflix is due for a potential rejection out of this range, and I'm going into it in the weekend into puts. Okay, so that is what I will disclose here. I didn't want to disclose it because I was going to point you guys to get in the Discord, but maybe you'll get in the Discord anyway. Okay, I also want to let you know, for Discord members, my apologies, I really didn't trade this week. And the reason being is because I literally have been getting like 3-4 hours of sleep. I got some insomnia coming back, and just trading in that wrong mindset is just not gonna work. Okay, I don't feel the want to take any trades that are steady entry points, steady exit points. I'll probably just lose money off of the no sleep. But overall, guys, that is what I got for you for today's video. Make sure to check the top link in the description that says join the Discord. Get in here. Do not sleep on it. I'm in there on the daily. We talk stocks and crypto all day long. I post my trades as soon as I enter them. We have a ton of other benefits. We post our gains, post our losses. It's a fun community. If you're not in there for 2025, get in now. It's still only January. Moomoo is the second link in the description for a free broker where you can get up to 30 free stocks, each valued up to $2,000 per stock. Use my link, open an account, and once they approve you, make a deposit into your account. You're also earning 8.1% APY on your uninvested cash, access to level 2 order book data for free, trading options, going long, going short, viewing other exchanges, and more as a retail trader. Go do that. Don't sleep on it. Those are the top 2 links in the description of the video, and they should take you 2 minutes. That is it, guys. Enjoy the rest of your weekend. Make sure to have post notifications on. Share this video with your friends. I love you all. God bless. Lottery Socks out.